tax advantage returns. As we say, we structure these things where all our investor partners have ownership. You have direct ownership, and with that, you get the benefits of real estate. So when we're talking about paying out dividends and those annual cash-on-cash returns or cash flow that get distributed, that's actually considered return of capital. So we are not decreasing your equity position in the entity, but the money we are paying out is considered return of capital. So those cash flows that you're receiving during the life of the investment are tax deferred. Okay? It basically pushes everything to the end where your capital gain will be larger, but we've got various things that we can do with capital gains rather than earned income. It's considered return of capital, so it's tax deferred. The depreciation, as an owner, you get depreciation benefits, and again, we're not CPAs. I can chat to you all day about depreciation, but I can't tell you how it affects your specific situation. But in a nutshell, depreciation is a paper loss that you're able to expense. It's a passive loss, and you may or may not be able to offset other passive incomes with that loss. Okay, equity harvesting. So this is one of the greatest things that we can do. We increase that value by the $1 million within a 14-month period. We are able to refinance properties and pull out more equity because we've created, that $1 million. We can refinance the deal, and again, those proceeds returned to investors are tax deferred. We're basically restructuring debt. So it's not a sale, it's not an income, we've just restructured debt. So we're able to harvest that equity, structured as return of capital, and then just really unique that again, we're in a situation where we're going to be returning a significant amount of investor capital within a 2-year period, and it's going to be non-taxed at that point in time. Talking about capital gains, we get to the end of the life cycle, and most of this is all shifted to capital gains. We can do things like 1031 exchanges. We just have various other opportunities to offset tax. And legacy wealth transfer. So in real estate and taxing, there's a lot about basis with the tax basis in a property. With a legacy wealth transfer, again, depending how you set it up, how you hold it, and we'll gladly help you, connect you with people who can advise on this. Basis can be reset. So if when you talk about generational wealth, things like capital gains, all of that, the basis resets when someone were to pass on and transfer their ownership to their heirs.